Across the United Kingdom, a major financial change is on the horizon, and it's one that could reshape how millions of people manage their income, pensions, and taxes. In a year already filled with financial uncertainty, the UK government has just confirmed a massive update from Her Majesty's Revenue and Customs HMRC, and it all begins on November 10, 2025. From that date, HMRC will roll out a completely new real-time digital tax system, one that automatically tracks income, updates tax codes instantly, and flags overpayments or underpayments as they happen. At first glance, it may sound like a small administrative change. But make no mistake, this update could have a direct effect on your monthly paycheck, your pension income, and even how quickly you receive your tax refunds or deductions. So today, we're breaking it all down, what this HMRC rule change really means, who's affected, what's changing from November 10th, and how you can protect your income and avoid penalties under the new system. Because while social media has been flooded with rumors of tax freezes and account suspensions, the truth is both simpler and more serious. Welcome to Pensioners Power, your trusted source for everything you need to know about pensions, retirement planning, and financial wellness. Here, we cover the latest news, expert insights, and essential updates to help you maximize your retirement years. Whether it's understanding pension schemes, making the most of your savings, or staying informed about financial changes, you're in the right place. If you're new here, don't forget to hit that subscribe button and turn on notifications so you never miss an important update. Now, let's jump right into today's topic. On October 15, the UK government quietly published an update on gov.uk, confirming a major HMRC system overhaul, starting on November 10, 2025. The change focuses on something called real-time tax reconciliation, a cutting-edge system designed to automatically cross-check income, benefit payments, and deductions across multiple sources as they happen. This means your tax code will adjust automatically if your income changes. Underpaid or overpaid taxes will be detected within the same tax year, not months later. Any discrepancies in pension income or benefit-related earnings will be flagged immediately. On the surface, it sounds like progress faster, more accurate, and more transparent. But there's a catch. It also gives HMRC far greater access to your financial activity, especially if you receive income from multiple sources like universal credit, part-time work, or state pensions. So why is HMRC doing this? According to the government, the goal is to modernize the UK's outdated tax system and prevent revenue loss. In the 2023-24 tax year alone, over 2.3 million tax code errors were recorded, leaving many workers shocked by incorrect deductions or surprise tax bills. The new system aims to end that chaos. It's designed to integrate payroll, pensions, and self-assessment systems, ensure benefits and taxable incomes are synced instantly, detect errors before they reach your payslip or pension payment. However, financial experts warn that ordinary taxpayers, especially older adults and pensioners, could find the transition confusing, particularly if they're not familiar with HMRC's online tools. HMRC has confirmed that the first group affected will include pensioners receiving both state and private pensions, employees who also claim universal credit or working tax credit, self-employed workers who file quarterly returns, individuals earning interest, dividends, or rental income. In short, anyone with more than one source of income will be part of the first wave. So, if you're a retiree with rental income or a part-time worker claiming pension credit, your details will begin syncing automatically from November 10, 2025. At the heart of this overhaul is the newly upgraded HMRC Digital Tax Account. From November onwards, this account will serve as your main financial dashboard with the government. You'll be able to see live updates on income and deductions, receive instant notifications for refunds or additional tax owed, get alerts if your data doesn't match your employer or pension provider's reports. But here's the warning: if you fail to check or update your account regularly, you could face penalties or delays in your payments. Experts are urging pensioners and older taxpayers to log in at least once a month to ensure their records are accurate and up to date. Mark these dates in your calendar now, because missing them could mean delays, deductions, or fines. November 10, 2025. Real-time tax reconciliation goes live. November 23, 2025. Deadline to confirm your income sources in the digital tax account. December 15, 2025. Automatic recalculation of pay and pension codes begins. January 6, 2026. First penalty notices issued for inaccurate or missing information. These aren't just routine deadlines. They're crucial steps to protect your income flow. For pensioners, the stakes are especially high. Under the new system, income from both state and private pensions will be merged and taxed in real time. If one provider reports late, HMRC may temporarily adjust your code, potentially reducing your next pension deposit. While refunds will be processed faster, so will deductions. For those living on fixed incomes, even small adjustments could make a big difference each month. Self-employed workers and freelancers will also feel the impact. From November 2025, HMRC will fully integrate self-assessment with the Making Tax digital system. Invoices, expenses, and income will now sync automatically, feeding directly into the real-time reconciliation engine. While this reduces year-end paperwork, it also leaves less room for manual corrections. Accountants recommend keeping digital copies of invoices, receipts, and statements in case HMRC queries your figures. Now let's clear up some of the false information circulating online. Myth 1. HMRC will freeze your bank account. Fact: HMRC cannot freeze personal accounts without a court order. Myth 2. You'll lose your tax refund if you don't log in weekly. Fact: you only need to verify your account if you receive a notification. Myth 3. This affects only high earners. Fact: anyone with multiple income streams is affected regardless of income level. The government insists this is about transparency, not punishment, but critics argue the timing just before the new tax year could cause confusion. Here's your essential checklist to prepare. Log into your HMRC account and verify your employer, pension, and benefit details. Make sure your bank details and address are correct. Check your tax code matches your current income. Contact your accountant if you earn from multiple sources. Keep copies of payslips, pension summaries, and invoices for the past 12 months. Small steps now could prevent major financial headaches later. While experts praise the modernization, they're also sounding alarms over data security and digital literacy, especially for seniors. Groups like Age UK and Citizens Advice are calling for helplines and tutorials to help older taxpayers navigate the system. Looking beyond 2025, HMRC plans to extend this model to include council tax adjustments, national insurance tracking, and direct benefit verification, all under one central account. So yes, November 2025 marks just the beginning of a wider digital revolution in the UK's tax and benefits system. Thank you for watching Pensioners Power. If you found this video helpful, be sure to give it a thumbs up and share it with others. Stay informed, stay engaged, and we'll see you in the next video with more insights on the issues that affect the UK. Take care, and don't forget to subscribe to my channel for all the latest updates.